Welcome back to Investing Talk podcast. Today, we're zeroing in on a company that, well, touches nearly every household globally, Unilever.
That's right, a real giant.
Exactly. Their Q2 2025 earnings report is right around the corner, and we've poured over the pre-earnings analysis to give you the most crucial insights.
We're aiming to connect the dots for you today.
We are. We're going to unpack everything from what analysts are expecting to historical performance and, what the options market might be signaling. Our mission is really just to get you thoroughly informed on Unilever's upcoming announcement. And before we jump into the numbers, if you're finding value in these insights, please remember to subscribe, like, and maybe leave a comment.
Yeah, that support really helps.
It truly does. And if you're interested in supporting us further, maybe buying us a coffee, you'll find details for that in the show notes.
And definitely let us know in the comments if there's a company you want us to look into next time.
Oh, yes, please. Always looking for suggestions.
Indeed. Even for a company as established, as huge as Unilever, each earnings report is, well, it's its own little puzzle, isn't it?
It really is.
We'll be piecing together the market expectations, the company's own guidance, those broader economic wins. Try to give you a clear, comprehensive picture. It's about understanding the why behind the numbers.
Absolutely. So let's start with the immediate future. When exactly is Unilever's next big announcement, and what's the market consensus saying ahead of time?
Okay, so Unilever is scheduled to report its Q2 2025 earnings on July 31st, 2025. That's before the market opens.
Before the bell. Okay.
Yep. And for those who like to listen live, there's also a webcast plan that's at 18:00 a.m. UK time that morning.
Good to know. And the forecasts, what are analysts expecting?
Looking at the consensus, they're anticipating Q2 revenue to be around $15.4 billion, give or take.
15.4 billion. Okay, and earnings per share. EPS.
For EPS, the historical pattern for Q2 suggests we might see something in the range of $1.82 per share.
$1.82.
And the full year forecast, that's currently holding steady at about $3.44.
Right, that gives us a baseline. But are there any, subtle signals like whisper numbers suggesting the market might be bracing for something a little different?
For a company Unilever's size, explicit whisper numbers aren't always widely spread around. It's not like some smaller tech stock. Okay. However, it's worth looking at their recent track record. In their last Q2 report, so Q2 2024 technically, Unilever actually delivered an EPS of $1.82 per share. That was against a lower expectation of $1.71.
So a beat then.
Yeah, about a 6% beat. It definitely showed some positive momentum at that time.
Okay. And what has Unilever itself told investors? What was their guidance for this period?
Management's been quite clear, actually. They guided for the second half of 2025 to show underlying sales growth. Well, ahead of the first half.
Ahead of H1, okay.
Targeting a 3-5% range for that underlying growth.
Right.
And perhaps more importantly for investors, they also anticipate operating margin improvement.
Margins. Yeah. Always critical.
Absolutely. They expect H2 margins to be at or above 18.5%. That's a really critical piece of info because, in a company like Unilever, consistent profitability improvements, that's what really drives the long-term value.
Makes sense. So knowing the outlook is crucial, but understanding the past often helps, right? What does Unilever's recent earnings history tell us about their performance and maybe more importantly, how the stock typically reacts?
Yeah, good question. If we dive into the last 4 quarters, you actually notice an interesting kind of alternating pattern.
Oh.
Unilever has either beaten or missed EPS expectations in successive quarters. It's been back and forth.
Really? So like clockwork?
Almost. For instance, after that Q2 2024 beat we just mentioned, the prior quarter, Q1 2025, they actually missed, reported 0.845 against a forecast of $1.43. Big miss.
Wow, okay.
So this alternating performance, it isn't just a statistical quirk, I think. It's a key signal of underlying margin volatility.
Right, volatility.
So for you, the investor, it means that while Unilever has these incredibly strong established brands, they might be grappling with consistent cost control or maybe pricing power. Makes their profitability a bit of a roller coaster.
So that adds a layer of risk, even for a stable giant.
Exactly, that inherent unpredictability.
So if there's this back and forth, does an earnings beat guarantee the stock pops? Or a miss mean it drops? What's the actual link between the numbers and the share price historically?
That's a perceptive question, and honestly, for Unilever, the post-earnings price reaction often defies that simple logic.
Doesn't always follow the script.
Not really. Take that Q2 2024 EPS beat, the 6% beat. The share price actually declined by 1.0% right after.
Declined after a beat. Interesting.
Yeah. And then in Q1 2025, despite that pretty significant miss, the stock showed a fairly muted reaction. There was an initial dip, sure, but it partially recovered intraday.
Uh,
So in general, price moves for Unilever have been characterized by, let's say, muted volatility in response to earnings.
Muted volatility.
It tells us that for a mature, stable company like this, the market often prices in a lot of the expected news ahead of time,
Right, it's already baked in.
pretty much. So for you, it's a reminder that maybe chasing those immediate post-earnings pops or drops might be less effective here. It pushes us to look harder at the underlying trends.
Okay, so beyond those headline EPS numbers, what are those broader trends in their key metrics that you think really matter for investors? What should we be watching?
Well, beyond the quarterly EPS, we've seen pretty steady underlying sales growth. It was reported at 3.4% for the first half of 2025.
Okay, 3.4% underlying growth.
Margins are improving sequentially, which is definitely a positive sign,
Hmm.
but they are still navigating these broader macroeconomic headwinds,
Mm.
fluctuating raw material costs, supply chain stuff.
Still challenges there.
Oh, yeah.
Yeah.
Now, this growth in turnover, it's actually a healthy mix. It's driven by both volume, but 1.5%, meaning they're selling more actual stuff.
More boxes off the shelf.
Exactly. And pricing around 1.9%, so they're also able to command slightly higher prices.
A good balance.
It is. But remember, it's a global company.
Mm.
So these positive effects get partially offset by negative currency impacts.
The FX headwinds.
Always a factor for multinationals. It's
Mhm.
a common challenge in international markets, can eat into profits when they bring it all home.
Right. So moving from the pure numbers, what significant events or, overarching trends were maybe at play during this last quarter? Anything that could really impact these results? Big surprises, quiet shifts.
Interestingly, this past quarter for Unilever seems to have been relatively calm on the M&A front or major product launches or any big crisis events.
More steady state.
Seems like it. Instead, the focus really appears to have been on continuous operational improvements, kind of keeping the ship steady and optimizing.
Okay.
What does stand out, though, is the positive momentum they've apparently built, particularly in emerging markets. Think India, Indonesia, China.
Those are key growth areas.
Absolutely. So it suggests maybe a period of stable execution rather than, dramatic external events driving things.
Okay. And connecting that to the bigger picture, how is the broader consumer staples sector doing? And what macroeconomic factors are particularly relevant for Unilever right now?
Well, the consumer staples sector, where Unilever is obviously a dominant player, it generally benefits from pretty stable demand.
People always need soap and soup.
Basically, yes.
Yeah.
People keep buying essential food, cleaning products, personal care items, even in sort of subdued market conditions. That provides a degree of resilience.
A defensive quality.
Exactly. However, we can't ignore those currency fluctuations like we mentioned,
Yeah.
especially between the US dollar, the euro, the British pound. Those have been a modest negative factor for reported results.
Still biting a bit.
A little. On a brighter note, though, while global inflation is still a risk, there are some encouraging signs that input costs, raw materials, might be stabilizing.
Oh, that would be helpful for margins.
Hugely positive for future profitability if that trend holds.
Okay, so given those macro factors and Unilever's internal focus, has analyst sentiment shifted at all as we get closer to the report date?
Yeah, actually, building on that point about potentially stabilizing costs, we are seeing analyst sentiment starting to improve a bit.
Oh, okay. How so?
The consensus for the full year 2025 EPS modestly increased recently, moved up from around $3.27 to $3.44.
A little bump up.
A little bump.
Huh.
Most analysts right now are maintaining a neutral stance on the stock, though. We haven't seen any major upgrades or downgrades reported specifically related to Q2.
So cautious optimism, maybe? Waiting for confirmation.
That's how it feels, perhaps waiting for this actual report to confirm those potentially improving trends before getting more bullish.
Makes sense. Okay, let's shift gears a bit and look at the market's technical pulse. How has Unilever stock actually been behaving on the charts leading up to this report? And what's the options market telling us?
Well, pre-earnings, Unilever shares have largely just moved sideways over the past week, pretty much stuck in a relatively tight range.
Flatlining a bit.
Yeah, we haven't observed any significant pre-earnings run-up or, a big sell-off. That often signals strong conviction one way or the other.
Right.
So this range-bound behavior suggests the market is currently, well, indecisive. Not strongly positioned either way right now.
So if the stock itself is mostly flat, what does that neutrality mean for options traders? Is there any strong sentiment visible there?
It mirrors it pretty closely. Looking at the options market, the volume between call options and put options appears quite balanced.
No big lean either way.
No extreme positioning evident, which aligns perfectly with the neutral price action we're seeing in the stock itself. Neither calls, which, profit if the price goes up,
Right, the bullish bets,
nor puts, which profit if it falls.
the bearish bets.
Neither are overwhelmingly favored right now.
Okay.
Now, this raises an important question for you, the listener. What kind of price movement is the options market actually expecting after these earnings come out?
Yeah, what's priced in?
The implied volatility, which is basically the options market's best guess for how much the stock will move, up or down, it's often measured by something called an implied straddle.
The straddle move, right.
Exactly. Right now, that straddle is pricing in a potential 2.5% move for Unilever's shares post-earnings.
Plus or minus 2.5%.
That's what the options market is implying.
Hmm.
However, and this is key historically, the actual price moves after earnings for Unilever have often been below this implied volatility.
So the options might be a bit expensive relative to the typical move?
Potentially, yes.
Yeah.
It suggests that the options for this particular event might be slightly overpriced for the expected movement. That's a crucial insight if you're trading volatility directly.
Very interesting. Okay, so given all this info, the forecasts, history, sentiment, options, pricing, what are the most likely best and worst case scenarios we should maybe brace ourselves for?
Okay, let's map those out. For a bullish case, what you'd ideally want to see is a convincing beat on both the top line, so revenue,
Yep.
and the bottom line, the EPS.
Both beats.
Yes. And crucially, this would need to be coupled with an upward revision to their full-year guidance to show confidence going forward.
Right. Any specific numbers there?
Specifically, if they show H2 margin improvement hitting, or even better, exceeding 19%, that would be a very strong positive signal.
Above that 18.5% guidance.
Exactly. And continued strength in those emerging markets we talked about, alongside robust cash flow, that would all reinforce the bullish sentiment.
Okay. Makes sense for the upside. Now, on the flip side, what could really trigger a negative reaction from investors? What's the bearish scenario?
A bearish case would likely involve a miss on either EPS or revenue. Or perhaps even more impactful would be cautious guidance.
If they sound worried about the future.
Precisely. Especially if it signals margin compression coming or maybe weaker volume growth than expected.
People getting nervous about demand.
Right. And those lingering macroeconomic uncertainties we discussed. They could amplify any negative surprises, whether it's currency impact being worse than expected or a sudden jump in input costs. That could prompt a sell-off, especially from investors who are already watching those margins closely.
Got it. So among all these numbers, potential outcomes, what, in your view, is the single most important metric for investors to laser focus on when that report actually drops?
For me, the key metric to watch here is unequivocally the underlying operating margin, UOM.
UOM. Why that one specifically?
Well, given Unilever's ongoing strategic shifts, they're trying to enhance efficiency and the volatile input cost environment they're in. UOM isn't just another number.
It's more central.
It's the clearest indicator, I think, of their operational efficiency and their pricing power. It really shows us if their efforts to streamline and optimize are actually translating into a healthier, more consistent bottom line.
Whether the strategy is working, basically.
Exactly. And that's absolutely crucial for a company of this scale to grow sustainably. Consistent profitability improvement is the name of the game here.
Okay, UOM is the one to watch. So pulling all these threads together now, what's our overall leaning for this Unilever earnings report? Where do we land, and maybe how confident are we?
Okay, our overall leaning, after looking at all this, is probably neutral to slightly bullish.
Neutral to slightly bullish.
I think there's a pretty solid expectation of margin recovery, right?
Yeah.
That's supported by management's own constructive guidance and that slightly improving analyst sentiment we saw.
Plus the defensive sector aspect.
Plus, yeah, the consumer staple sector itself is quite defensive, offers some stability. However, you have to balance this against those ongoing macro and currency risks.
Can't ignore those.
Can't ignore them. And remember, Unilever's historical price action suggests relatively muted volatility. Don't expect fireworks right out of the gate.
Manage expectations on the stock move.
Exactly. So on a confidence scale, say 1 to 10, where would we place this? Maybe a 6.
A 6 out of 10.
Yeah.
So leaning positive, but not overwhelmingly confident?
Precisely. The positive factors are compelling, But that historical sensitivity to macro and forex negatives, combined with the generally muted post-earnings stock moves,
Mm,
it just adds a necessary layer of caution. It's
right.
not a slam dunk, but the upside potential does seem, slightly favored.
Okay, a 6. So for those of you listening, perhaps considering a move, what are some potential strategies you might want to think about around this earnings event, given that outlook?
All right, let's think about strategies. For risk-averse investors, the folks who don't like surprises,
Yeah?
it might be prudent to maybe avoid holding the common shares directly through the earnings announcement,
Mm-hmm.
or perhaps consider using protected puts to hedge your position.
Limit the downside risk.
Exactly. That's a way to limit potential losses if things go unexpectedly south.
Okay. What about those with a higher risk tolerance?
Right. For risk-tolerant investors, given that history we talked about where the actual stock moves have often come in below the implied volatility from options,
The options being potentially overpriced.
potentially. So there could be opportunities in trading short-term options volatility.
Hmm.
Strategies like selling straddles or strangles, for example, could potentially profit if the actual price movement is less dramatic than what the options market is priced in.
Selling the expected volatility.
Essentially, yes,
Hmm.
but that carries its own risks,
Of
obviously.
course. And finally, for event-driven traders.
Okay, for event-driven traders, that history of muted initial reactions is key. It might mean it's wise to wait for some post-earnings trend confirmation before taking a really significant position.
Don't jump the gun on the first tick.
Exactly. Don't rush in on the immediate knee-jerk reaction. Let the dust settle a bit. See how the market truly digests the report over the first day or so. Get a clearer picture.
That makes a lot of sense. Wow, that was a truly comprehensive look at Unilever's upcoming earnings. It really does highlight just how many factors go into understanding a company's performance and, maybe even more complexly, the market's reaction to it.
It really does. And, this brings us to a thought for you, our listener, to maybe chew on.
Oh, yeah.
How do you weigh that optimism we see from management guidance, from improving analyst sentiment? How do you weigh that against the historical evidence of, well, muted price reactions and that clear sensitivity to external macro factors when you're forming your own investment thesis?
Hmm. Balancing the forward-looking optimism with the backward-looking reality. That's a fantastic question to ponder. Thank you for joining us for this analysis of Unilever.
Our pleasure.
We really hope this has given you a clearer picture as you prepare for their earnings report. And remember, please subscribe, like, comment if you found this valuable.
And check out the coffee link in the show notes if you're feeling generous.
Yes. And let us know if there's a company you'd like us to feature next. We'll be back soon with another illuminating session. Until then, stay informed and think critically.